and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready. But before coming to taking all your stock-related queries, let's have a look at what the markets are.
Right, absolutely, Shrishti. Let's take a look at how the markets are performing. And good morning to all of our viewers. This is Buy Now, Sell Now. Let me take you through all the stock moving action this morning. If you look at the markets, absolutely flat cues coming in from the benchmark indices. Remember that Nifty had posted second day of decline in yesterday's trading session. For now, we are still trading flat with a negative bias. We had lack of global cues. Your US markets that actually shut shop flat, as well as your SGX Nifty hinting that we will be in for a muted start, and that's exactly how it has transpired in today's trading session. If you look at Nifty Bank, that one also is trading with a negative bias. Key to note is the market breadth. The advanced decline ratio is still very much in favor of the advances as we speak. So some sort of a bright spot coming in on that particular front. But talking about the list of losers, you have the IT index or IT stocks that are back to losing ways. Once again, you have Infosys that's down about 1.5%, followed by HCL Tech, IndusInd Bank, Asian Paints, as well as Tech Mahindra. That one also is declining in trade today. So yes, it looks like a weak day of trade coming in for the IT index, which had managed to snap a two-day losing streak in yesterday's trading session. Talking about the list of gainers, you have the metal counters that are actually ruling the charts on the Nifty, like Tata Steel as well as JSW Steel. Bajaj Auto is the other counter that is in focus, and DV's Laboratories, that one also is posting gains once again in today's trading session. And we will talk more in depth about the pharma sector, what is exactly happening in that particular space in our BNS and Lens segment. On to the sectoral movers then, you have metal index that's trading gains with gains of about 1%. Small cap index is trading with gains of about 0.4% as we speak. Auto index holding on to mild gains. But you have IT index that is declining the most. It is the top sectoral loser in trade today. 1% downtick coming in for the IT index. Even you have PSU Bank index that's down about 0.3%. But all eyes definitely has to be on that pharma index and the pharma stock, especially Nifty Pharma index. If you look at that one, is trading with a positive bias today. It is holding above the 200 DMA mark. But what is actually working in favors of the pharma sector, Shrishti?
Well, yes, absolutely, Sharon. An outperformance coming in by Nifty Pharma. If you will see the last 1 month chart, that's actually up by 8%. What about the move, Sharon?
Yes, absolutely. But you know, the 8% move coming in for Nifty Pharma Index in the last 1 month. You have JP Morgan also that's come up with a note who believes that it is a good time to go ahead and look at the pharma counters right now. And this comes in on the rationale of price erosion moderating in the United States, as well as valuations looking attractive at the moment. But what else does JP Morgan have to say in that big note of theirs? Let me bring on board my colleague Somit for that. Somit?
Well, JP Morgan has come out with this positive note on pharma sector, and they have stated out 5 reasons why one should be positive on the sector. Now, the first reason is they are saying that the India portfolio is likely to witness the highest price increase. Now they're expecting a 12% price hike for the NLEM portfolio, which will be the highest in this segment, while for the non-NLEM portfolio they're expecting a price hike of around 10%, which is allowed by the government. Now if you see in the last couple of years, the margins of these pharma companies were squeezed on the back of pricing pressure seen in the US generic market, and also because of higher input cost, and now this is expected to reverse in the coming year because the US generic price erosion has relatively moderated, while the input and freight cost have softened, and both these factors should aid the margins of the pharma companies in the current financial year. Now, the fourth reason is that they are seeing opportunistic gains in the US market arising on account of increased drug shortage and supply disruption, which should aid the demand for the Indian pharma companies. And the last reason is the valuations are reasonable. Now, if you see Nifty Pharma Index relative valuation compared to the benchmark is on the lower side, while the sector's earnings is expected to grow at a CAGR of nearly 20% over FY22 to FY25. Now, the two top picks for JP Morgan is Sun Pharma and Cipla. They are bullish on Sun Pharma on the back of solid domestic franchise, continued ramp up in specialty business, reducing generic exposure and reasonable valuations, while they are bullish on Cipla on the back of continued outperformance seen in the Indian market, strong traction seen in one of its key products in the US market, while the risk reward is also favorable after the recent correction according to JP Morgan.
Thank you so much for that, Somit, for taking us through what are the top picks coming in for JP Morgan in the pharma pack. But Shrishti, we will very soon have one more company that will be joining the pharma pack, isn't it?
Well, yes, absolutely, and that's the Mankind Pharma IPO that will be opening on 25th of April till 27th of April. And if you will see, the issue size will be of around 4,326 crores. That will be a completely OFS, Cheryl, and that is something that the whole of the industry is watching out for.
Right, absolutely. Just to take you through the price band of Mankind Pharma, it will be about 1,026 rupees to about 1,080 rupees per share. That is the price band that is fixed for now for Mankind Pharma IPO. And like Shrishti was mentioning, the IPO will be opening on the 27th or rather 25th of April and will be shutting on the 27th of April. And the issue size is about 4,326 crore rupees. And some of the details about the company, remember that this is a purely domestic business dominated business, that is Mankind Pharma, and also they have 36 brands in the pharma business with sales of about 50 crore rupees, and they're operating in pharma as well as healthcare products domain as well. So another one, a key one to watch out for, a new entrant likely in the pharma space. But what are the prospects looking like, and how are the prospects looking like for the entire pharma pack? JP Morgan is pretty bullish on the counters. JP Morgan likes Sun Pharma as well as Cipla, but do our experts with that view? So let me bring on board today Kunal Bothra as well as Ashish Kapoor. A very good morning to you, Kunal, as well as Ashish. Thank you so much for joining us on the show. And Ashish, you heard what JP Morgan had to say on the entire pharma space. They are definitely bullish on it. They are saying that there seems to be some sort of a moderation in the price erosion in the United States, as well as the valuations are looking attractive for these pharma counters back home. Do you concur with that view? Do you think now is the time to look at the pharma space?
Yeah, I think it's a time to look at the pharma space, mainly because it has underperformed over the last several years now. There is, of course, every industry goes through a cycle. So there were issues. There were a lot of issues which a number of pharma companies were having with their US approvals and US inspection, US FDA inspections, etc. Also, the results were very disappointing across the board on several quarters in the past. The shares have really corrected. So what is good about pharma is that the valuation, one sector in the market where valuations are actually very attractive is the pharma space. Historically also and otherwise also, they're all trading at very reasonable valuations. Somewhere down the line, the sector will get back its mojo because after all, pharma is a very essential commodity used everywhere in the world. Also, with the rising infections again, and with COVID to some extent coming back again in India and some other parts of the world, and various other virus infections which are coming back regularly now. Over the several years, we have seen various infections coming across from different animals and various other forms. So I think that the world is living in a state where infections are increasing. So the demand for various pharma products as well as general, because of the focus on general healthcare, will continue to rise. So I think my sense is that the sector will come back strongly, and there's a very good time to buy now when the chips are down, and very defensive in nature. So it doesn't really get affected by even the economic slowdown much. And I think that in this sector, one can easily go ahead and buy. My top three picks would be Divi's Lab. Despite the recent run-up, I think looks very attractive. The other two would be Cipla and Sun Pharma.
Okay, so that's the fundamental take on the pharma pack. But Kunal, let me come to you. Not just the large cap names in the pharma pack that have shown great moves. Like yesterday, Divi's Lab was one of the top gainers in Nifty 50 today, yesterday. But talking about the mid cap and the small cap space, that is also now gearing up. How do you see the pharma pack, and which are some of your top recommendations from the sector?
Good morning, Srishti. Good morning, everyone. So I think it's an interesting space. Over the last many days, we've seen confidence brewing into the pharma pack. Earlier, it was a space where traders used to neglect the kind of recovery which we've seen for the pharma index. As you can see on the charts, there has been a massive spike in the RSI for the pharma index. Look at the recent surge for the pharma index, and that's an indication where a new trend emerges. So whenever a new trend emerges for the index, we see a massive spike coming into the RSI, which leads into the index going into a very strong uptrend. So what we are seeing right now is just an initial phase of what I believe could be a huge multi-month as well as a multi-quarter rally for the pharma index. It always makes sense to stick towards the large cap pharma stocks initially. So my sense is that you need to stick out with large cap names like maybe Dr. Reddy, Cipla, which has been one of the consistent recommendations we have been making earlier. DV Slab. These are the few names which one should concentrate on. And once that portfolio seems to get completed, we can then move on to those mid cap pharma names. So as of now, concentrate on the large cap pharma stocks. Dr. Reddy, DV Slab, Cipla would be the top bets from current levels.
Cipla as well as Divi's Lab are the top recommendations by Kunal, and the recommendation is still to stick with the large cap names. But with this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, we'll be taking all your stock related queries. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now, ET Now, and this is the show where we get you answers for all of your stock related queries. You can connect to us. We are live on Twitter as well as Facebook, or you can write to us on the WhatsApp number that will be flashing on the top of your screen very shortly. Do mention your name, the stock you're looking to invest in. If you've already invested in the stock, then do mention the buy price as well as the quantity that you have purchased of the stock and the time horizon. That will help our experts help you better. But before we get going with all of your queries, Ashish, let me come to you and very briefly, if you could tell us what should retail investors do to make sure that they protect their wealth, given the fact that we've entered the earnings season and the volatility that comes along with it?
But I think the simple thing is that the markets are clearly rewarding performance and quality. So you have to remain with the shares where you have high conviction, and where you have researched the idea, or you have somebody else who's researched the idea and has given you the advice. The markets once in every few years are the kind of markets which we saw just post COVID in 2021. Those markets very easy to make money, but of course those kind of easy money days don't last long. Problem is that in 2020, because of COVID, a lot of new investors came in, and because the going was so easy, they can't reconcile now to the changing reality. Actually, the reality is that markets are not so easy to make money in, and you really have to get your research and or the way of investing in an orderly way. So my advice to any investor would be that these markets are going to be volatile because there are too many headwinds across the globe. There are also elections next year in India, so I think there'll be a lot of headwinds, lot of tailwinds happening together in many ways. So you really have to be in stocks where your conviction is high, so that any amount of volatility doesn't shake you, where you know what the story behind the stock is. And as long as conviction is high, I think stay invested. Use the volatility to, in fact, average out at lower rates. Volatility can be a good friend also. So as long as you have high conviction in your idea, you can use the dips to kind of get your average buying price lower. That's how you should approach the markets. The easy making money days are far over and are not going to come back in any time soon, I think. So you have to really, research your ideas, or use some advisor who has good research capability to advise you on how to go about it. That would be the way forward, in my opinion.
So that's the advice coming in for all our retail investors. Stay invested with your high conviction bets, and during the show, we'll try to get the top recommendations and the high conviction bets of our experts as we go along. But with this, let's kickstart taking all your stock related queries. And the first question that I have is coming from Bhagwan Bablani from Mumbai. And Ashish, let me come to you because he is holding 20 shares of Tata Elxsi from a price of 6,485 rupees. We always talk about the expensive valuations of this particular counter, and the stock has drifted lower, but trying to hold grounds around 6,000 odd rupees. Do you feel that this is the stock which can give returns, and you expect target price to be over 6,500 of rupees?
Well, like rightly said, I think it's very expensive. It still is expensive. Of course, the story is very real and very exciting. The problem with Tata Elxsi was that it multiplied very fast and reached a very high valuation. So the investor can approach in two ways. I think if the investor does not have any time constraint, yes, the investor has bought in at a high valuation, but an investor can hold it on for a couple of years. I think Tata Elxsi has a great business opportunity shaping up. The stock will definitely go much higher, but it will take time on two counts. First, like I said, the valuation is high. Secondly, the IT sector as a whole is experiencing a lot of headwinds worldwide because of fear of US recession and problems in the Western world. IT sector spending is slowing down. We have seen that in the results of even the majors like TCS and Infosys recently. So the sector will continue to kind of remain under pressure for at least in the coming few quarters. And also given the high valuations of Tata Elxsi, I think it will take time. So if time is not a constraint, the investor should stay invested, and if it does dip more from here, can slowly in a staggered way buy more to get his average down. But if the time is a constraint, then I think use any kind of a rally, any intraday or any kind of a relief rally to get out of this stock.
Kunal, let me come to you then. And this query is coming from Muscat from Mr. S. Gopalakrishnan. And he's first of all thanked you for your invaluable advice that you've given him all throughout the years. And also, he wants a short-term technical view on Pidilite. He's holding about 25 shares at the price of around 2,700 rupees per share.
Thank you so much for that, I think it's great to know that most of the advices have worked in your favor. Now, in terms of Pidilite, I think it's at a very strong inflection point. Now, the stock from 2,900, I think in 2022 second half, has corrected towards 2,200 to 50 levels. Now, what has happened is the stock has gone through a time-wise correction. There are some signs which are emerging that the stock is getting into a breakout mode. It's not yet confirmed a breakout the 200-day moving average, which is the first basic breakout point which we look out for. But it's just that the time-wise correction and that mild pickup is giving an indication that maybe the stock would sooner or later break past about the 200 DMA. So confidence is building up into the stock price. You should ideally trade the stock with a long bias. I would suggest that buy 50% of the quantity of your expected quantity at current levels, and assumingly whenever the stock confirms a breakout of this 200 DMA, then look to add on to another 50% quantity, and then I think that's where I believe a bigger trend could emerge for Pidilite. So I would recommend a buy, partial buy at current levels and partial maybe at higher zones of a breakout of 200 DMA.
Okay, Kunal, let me once again come to you. The next question is from Rajesh Maheshwari. He has been holding Anupam Rasayan, but he already booked out good amount of profits in this particular counter a couple of days back. But he's looking to re-enter in this particular counter, which is already up over 30% in the past 1 month. How do you see any levels that he should re-enter on?
See, I think you should not be in a hurry to jump into the stock. I understand that you've made good profits over here. But I remember that even last week or so, I had mentioned that the stock would eventually get into a correction phase. The reasons for that is two. One is that the stock has gone to a different level of divergence with respect to 200 DMA. Just to give an example, the 200-day moving average is at 700. The stock is at 1,020, 30 levels, which means there is a disparity of almost 40%, 45% with the 200 DMA. Such kind of disparities, they generally don't tend to last too long, and the stock eventually reverses towards the mean. And the other way to look at it is for the indicators are getting into an overbought territory for the stock. So on both the counts, I think you should wait out for a substantial correction. Don't be in a hurry to try and buy the stock just because you've been making profits earlier. Wait out for a point of mean reversion. Maybe if the stock corrects another 100 rupees from current levels, that could probably offer some interesting opportunities to try and enter the stock on a staggered basis.
All right, Kunal, I just opened another query. The viewer said long-term investor, but then he wants a short-term query. So one more coming your way. This one is coming from Mr. K. Parthasarthi. He's a CTN citizen. He's writing to us from Chennai. He wants to know technical view on Coal India. He's purchased the shares, about 200 shares at a price of 205 rupees per share. He wants to know whether he should book wait or book profits in this particular counter.
I think you should not be looking to book profits over here. Hold Coal India. There are multiple advantages by holding the stock. The chart patterns look extremely attractive. The stock is a high dividend paying stock. So I think it would also suit the kind of risk profile which you would be having. And remember that Coal India as well as most of the PSUs are going through their own phase of a very slow, steady turnaround. So I believe whenever the momentum picks up, you could see a very strong acceleration coming back into Coal India. So on all of those aspects, suiting your risk profile, I think you should be looking to stay invested on Coal India and not be in a hurry to book profits.
Okay, Ashish, coming to you for the next one. Question is from Vinay, and he's holding shares of NCC, 2,000 shares from a price of 70 rupees, sitting at a handsome profits right now. Is this a good time to book profits or hold on?
But I think historically NCC has kind of always failed to kind of give long investors a great amount of capital appreciation. It has usually been in a trading kind of a stock. So this investor, I think, is making money now, good amount of money. Should use this to book profits and move into some other stock.
Okay, this one is coming in from Arvind Reddy. He's writing to us from Hyderabad. Pennar Industries, Kunal. He's bought 50 shares at a price of 71 rupees per share, and he's bought this last week alone. So now he wants to know whether he should hold or book profits, because he has definitely made some good amount of profit on this holding. What should his strategy be?
See, we ideally believe that whenever a stock makes a fresh lifetime high, or multi-year high, then the stock goes into a different league of an upward trend, because the way the momentum picks up, the way the stock is positioned, and at a point where the markets have just gone to a recovery phase. So, which means that there should be more upside for Pinar Industries. What you should be ideally looking out for is that from your horizon of short term, now look at a more of a stretched horizon over here. Don't look at this as just an investment where you made decent amount of returns over the short term. I expect that possibly if this upward trend continues for Pinar Industries, say for the next 4 or 5 quarters, you could be looking at the stock hitting the 3-digit marks and going much beyond those levels. So there should be an upside of at least another 30 to 40% from current levels. So I would suggest a hold.
View coming in on Pennar Industry. Hold is a view coming in from Kunal, but we have a lot of queries piled up, and viewers, stay tuned. We'll slip into a break on this edition of Buy Now Sell Now. Continue taking your queries after the break. Don't go anywhere.
Welcome back. You're watching Buy Now Sell Now, where you get all your stock related queries answered by the experts. And continuing the same, Kunal, coming to you for the next one. The question is from Dhananjay, and he wants a technical view on Tata Consumer Products for the next 2 to 3 months. He's looking for a fresh investment out here. So what's your view on this?
So there are two patterns which are emerging for Tata consumers. One on the price front, because the prices are correcting, it's falling below the 50-day moving average. It's adding a lot of discomfort to the near-term trend. But the other way to look out for is that the indicators have started to show signs of rise. So, for example, the MACD has crossed back about the neutral line. The RSI has crossed back about the 60 territory. Just about a few days back. Now it's cooled off a bit. But I think with this resilience which comes back, it indicates that maybe the stock may not hit the previous low. So an ideal point for you to enter Tata Consumers would be maybe wait out for another couple of days. In case if the stock doesn't fall below the 680 mark, which was the previous swing low for the stock price, then it could be a confirmation that the stock is nearing a major bottom for itself. So I would suggest to wait out for another couple of days. 680 is the level. If the stock doesn't break below this level over the next 2 trading sessions, then I think it could be a very good level to buy Tata Consumers from a medium to long term play.
Okay, this one is coming from S. Manjunath, who's writing to us from Bangalore. He's a senior citizen holding about Canara Bank 500 shares at an average price of 425 rupees per share, and this since January 2018. And given the fact that we've seen sharp correction over the years in PSU banking names, Manjunath is at a loss of about 30%. So he wants to know whether this particular counter will reach his average price in the next 6 months, Kunal, and does it make sense to average or rather add some more of Canara Bank at this juncture, given the prospects for PSU Bank so far looks bright?
So first things first, I don't expect the stock to get into a big recovery mode and coming to a cost price at 400 plus over the next 6 months. I think the time horizon could be a bit stretched and extended. The other way to look out for is that what is an ideal level or a better level to buy or average Canara Bank. For example, over the last many months, we've been indicating that if these PSU banking stocks come closer to their 200-day moving average, that becomes a very good level for you to maybe add, accumulate, or maybe go for a contra buy at those levels. For Canara Bank, that level is as of now closer to that 275 mark. So I would suggest that in case, say over the next 1 or 2 weeks, if the stock goes into any kind of a correction, comes closer to that 275 mark, that would be a very good level for you to buy, and then bring down your average price to maybe 330, 335 for Canara Bank. That could be a much better strategy, for you to hold if you have a time frame of 6 months plus.
Okay, Ashish, the next question is specifically for you. The question is from Ghosh Dada from Delhi. He's holding 20,000 shares of IDFC First Bank from a price of 58 rupees. He wants to know, should he add more at these levels?
Well, I think IDFC First Bank, according to me, has a great story going forward. Of course, it's a smaller bank and it will take some years to kind of live out, to kind of unfold its potential. So as long as the investor does not have any time constraint, yes, use these declines to add more. But do remember that, I mean, I think it will they need a lot of patience. It might be 3, 4, 5 years before the stock really realizes potential. But if you can wait it out, I think the stock has every possible indicator to suggest that it could be a multi-bagger from here. But the time constraint is should not be there. It should be patient and can keep holding on till it realizes its potential. From here onwards, so if you can hold on for very long term, yes, the stock is a very good idea and use the dips to buy more.
It's coming from Leon, and Leon wants to know which are the stocks that he can look to actually undertake an SIP for the next 1 year, Ashish. And also he wants to know what's the future of Tata Steel for the longer term, because he's already holding this counter, about 3,800 shares at a price of 100 rupees per share. One, which stock that he can look at adding on or doing an SIP with, and also Tata Steel, the long-term prospect.
Well, I think firstly Tata Steel. I think yes, long-term prospects are good. Of course, it's a commodity stock. End of the day, very volatile, difficult to predict the trends, and not the best of ideas for a long-term stock, because most of these commodity and metals are better for trading, better for buying when the trend turns around and sell when the trend is peaking or trend is reversing. They usually do not or make a very great capital appreciation over the years. They're better ideas in the market, frankly. But yes, within the metal space, Tata Steel is one of the better companies. So yes, good idea to buy, look into it. And also, relatively speaking, metals are looking better from here. So I think it could be a good idea to buy. 1 year could be a smaller time frame, but if you have to buy stocks, I think there are sectors which are really coming back into their own. Look at buying into them. That would probably be more of capital goods and cement kind of thing. So I can suggest stocks like Ultratech Cement, one which could be used for doing an SIP. The other one could be Larsen and Toubro L&T, again coming back into its own after a long period. And third could be real estate, which has recently seen some bump after some time. In that, my favorite is DLF. So these could be some of the stock ideas you can look at with a 1 year perspective. And SIP would, of course, mean that you're using dips to whenever the dip happens to buy. That could help you in getting a better average. But like I said, I think 1 year could also, the return could also depend on how the market moves. But these are relatively easier sectors to buy the 1 year perspective, because these are sectors which are right now getting into momentum. That is basically real estate, capital goods, and cement.
Okay, so 3 top recommendations from the large cap space. Moving on, Kunal, the next question is from RK Jalan, and he is looking for fresh investments in Yes Bank and Biocon. What is the short-term outlook in both of these counters, and should he invest at these levels?
Yes Bank, I would not suggest so. Very high beta stock. So I think it's always prudent enough to go for some classic and quality mid cap banking names. Few other options which you can consider at current levels. You can look out for maybe an AU Bank, which has delivered some fantastic results, and even at current levels of 680 approximately looks attractive. You can look out for Federal Bank, which has corrected and is now available at a good risk reward from the banking name. So that's a preferred name which I would probably suggest. And of course, IDFC First Bank and such other names would keep on popping up on the list in terms of mid cap banking names. Now, from the pharma space, I think Biocon could actually be a stock which you can look to go for a long trade, because my sense is that the stock is confirming a sign of a major reversal over here. Risk reward is at play, and the stock could possibly at the cusp of a big turnaround. So Biocon is something which I would suggest as a buy.
Staying with some pharma names then, Kunal, this one is from Krishna Kumar, 2,250 shares of Gland Pharma. He's holding at the price of 1,650 rupees per share. He wants to know what's the prospect of this one. Should he look to average right now?
Yeah, I think it's a good stock to look to hold on. I think I'm not sure whether you can look to average at current levels, but I think maybe if the stock dips back towards 1250, 1275 range, that could be a better level to try and average Gland Pharma. So it's a stock which you can consider buying on dips or averaging on dips. I think 1250, 1275 could be a better level to average that.
On your recommendation only, Subramaniam entered into Manappuram Finance. He's sitting at profits right now. What is the short-term outlook on Manappuram Finance, and at this point in time, should he book profits?
Well, I would suggest to hold on to Manappuram Finance. I think it's a very interesting chart in the making. Manappuram Finance has just gone through a recovery process. So after being beaten down from 220 levels to I think around 87, 88 levels, it's just seen the first phase of recovery coming back towards 125, 130 mark. I think the second phase of recovery could probably play out maybe in the next month or so for the stock price, and that could lift the stock back towards 150 plus mark. So I would suggest a hold on Manappuram.
Okay, this one is coming in from Bhagwan. He's writing to us from Mumbai. GMDC, about 100 shares at a price of 130 rupees per share, and 1000 shares of Techno Steel Casting at the price of 34 rupees per share. Ashish, I'm unsure if you even track Techno Steel Castings, but GMDC, how does this one look to you on fundamentally, and does it make sense for the investors to stay put with this one?
Well, GMDC, yes, I think looks good. Looks an interesting bet, and I think will stay on. Again, patience would be needed because it's a smaller stock, and the momentum will come whenever it comes. But as long as time is not a constraint, GMDC could be a good idea to continue to hold on to. The other one I haven't tracked, so I'll not be able to comment.
Okay, Kunal, coming to you for the next one. Since we were discussing about the pharma names, Bharat is holding two pharma stocks. Firstly, it's Granules India from a price of 310 rupees, and the other one is Cipla. Entered at 880 rupees, sitting at a profits right now. So what should be the strategy? Should he continue to hold on, and any targets that you can share with him?
So both the stocks I would suggest a hold. Granules you can look out for maybe a target of 325 if it's a bit of a short-term kind of a target which you're looking out for. Currently the stock is at 300, 304 levels, which means a potential upside of another 7% from current levels. And Cipla on the other hand, I think 950 could be a zone where you may look to book out profits because the stock has gone through a sharp correction. It's bound to take some bit of more time for the stock to recover. So maybe booking out at 950 levels approximately, and then looking to buy back at the 900 mark would be a good strategy to buy Cipla.
All right, this next one is coming in from Rajan. He's writing to us from Delhi. He has 100 shares each. One is of Tata Communications, the other one is at Raymond. He bought around 1200 rupees per share. I'm unsure if he's bought both the stocks at around 1200 rupees per share, but he wants to know what sort of a target should he aim for both of them over the next 6 months to 1 year period, Kunal?
So can you repeat the first stock? Second is Raymond, you said, right?
As well as Raymond.
Sorry, Cheryl, I missed that.
Tata Communications?
Okay. Tata Communications and Raymond. Out of them, I think Raymond is a preferred name which I would suggest. So there are two themes over here which is very, very lucrative for Raymond. One is of course the real estate pack, and the other is the the textile arena. Both the segments and both the peer stocks have been doing exceptionally well. I think many times I've been voicing my opinion that the real estate stocks are going through a different leg of a breakout, which could potentially be a multi-month, multi-quarter breakout, even from current levels. So I would prefer Raymond's, from the two. Tata Communications, it's a bit of a inconsistent chart as such because after a decent pickup from 2022 lows, when the stock was at 900 levels to 1400 mark, the stock has somehow lost its mojo and it's now into a corrective phase. So Tata Communications is what I would avoid.
Ashish, RK Ahuja is looking for fresh investments in some of the stocks. He has three preferences: Phenolix Cables, Home First Finance, and the other one is Coal India. Any of the three counters that you like for the long-term investments, and if you can share the target, if you can share the entry price for that as well.
Is that for me, Srishti?
No, Ashish, this question is for you.
Okay, Coal India, out of the three, Coal India would be my pick, and I think Coal India, I do not have a target in mind, but the stock is certainly quite undervalued, has remained subdued for many years, has a very decent dividend yield on it, and a very safe near monopoly business. Business prospects are also improving, and I think there is a very limited downside risk. You have a great upside potential in Coal India. So that would be my pick amongst the three which you have mentioned.
Coal India is the preferred bet, but for this viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's take a look at what the markets are doing right now. And we are trading flat with a negative bias, tad bit off the day's lowest point. As you can see on your screen, that's the way how the benchmark indices are looking like. But Nifty Bank, the picture over there is a tad bit bleaker because Nifty Bank, on the other hand, actually has drifted lower from the start of the show. So take a look at what the names like IndusInd Bank are doing right now. ICICI Bank is also doing. They are also declining in trade. HCL Tech, Infosys continue to rule the charts. They are the top losers on the Nifty, while on the flip side, Divi's Laboratories is the one that is bucking the trend. But let's continue taking all of your stock-related queries. And this one is coming from Vivek and Kunal. He wants to know about JBM Auto. What sort of target should he keep in mind while selling the stock? Because he has about his cost buy price was 500 rupees per share. He's making good profits. What should he do for the next 3 to 6 months? Book out?
I think I would suggest to book out 791, 800 levels where the stock is trading. It's at a divergence from its long-term averages, and I believe that there could be a phase of correction which can come back into the stock. Volumes have also been a bit lower into this leg of uptrend for JBM Auto. So I think I would suggest to book out profits at current levels, or else what you can do is you can probably trail your stop loss to maybe a 2-day, 3-day swing low. So in case if the stock doesn't break the 2-day, 3-day swing low, then you can keep on trading the stop losses higher. But the moment the stock breaks those patterns is where I would suggest to exit as well as book profits.
Moving on, and Ashish, coming to you for the next one. Question is from Krish, and he's already holding pharma names like Divi's and JB Chemicals, but he's looking to add Torrent Pharma. Is that, would you recommend a fresh buy on Torrent Pharma at this point in time?
Torrent Pharma, I have tracked, but in case he's already using holding DVs and he wants another name in pharma space, I think Cipla looks very good, and Cipla could be added at the current levels also.
All right. Kunal, coming to you. This one is from Pratisha from Muscat. Firstly, she's thanked you also for all the advice that you've given till today to her. And today also she's asking you a query. HEG, she's making a loss of around 15%. And from the past few days, there seems to be a rally spurting in HEG. So she wants to know what should she do? She wants to exit this particular counter. Will this rally sustain? And up till what price can she look to exit this particular counter? She can hold. If you say yes, then only max 3 months.
Thank you so much for that. On HEG specifically, so I think the stock is getting into a turnaround mode. 3 consecutive weeks where you've seen the stock picking up pace from 920 to now 1080 levels. The good part about HEG is that it's high beta, but that also is a bad part about the stock price, because then you tend to see high swings of price action. So I understand that your comfort level is just about for another 3 odd months, but my sense is that the stock may take some bit of more time to get into its full swing of recovery. Since it's a high beta pocket, I would expect that whenever the recovery pans out for HEG, the stock can even maybe come back towards 1400 to 1500 mark. So difficult to ascertain whether that would happen in the next 3 months. But my sense is that this leg of recovery can actually take the stock higher to those 1400, 1500 levels, maybe in the next 6 months to 12 months.
Ashish, coming to you for the next one. The question is from Deepak, and he's holding 100 shares of BPCL from a price of 340 rupees. Should he continue to hold on or move out to another counter, and how are the long-term prospects looking like for this one?
Well, oil and gas space is looking good. I think should do well in the next few quarters. But having said that, and BPCL is one of the better stocks in the oil and gas space, so you can hold on to. But having said that, I think generally speaking, I think they're not a space where a lot of money is actually made for long-term investors. So depending on what the perspective is, I think if the investor is satisfied with the nominal returns and a good dividend yield, then yes, continue to hold on to BPCL. Otherwise, there are, frankly speaking, many better ideas in this market. and there are many better ways to make long-term capital in this market. I mean, I think just to give the case in point, I think we did mention about Tata Consumer somewhere in the discussion. Could be a much better stock to buy at these markets than to stay invested in BPCL. Like that, there could be many better ideas. I mean, I could suggest a lot of ideas, but if the investor is really an active investor, should consider moving out to some other names. Otherwise, if he's satisfied with nominal returns and nothing wrong with BPCL, can stay invested. And like I said, in the immediate near future, it seems that oil and gas should do well from here, so can make some money from these levels.
Point taken. Ashish, one more coming your way. This one's from Hemant. He's holding two pharma names. One is 30 shares of Aarti Drugs at a price of around 503 rupees per share. Piramal Pharma, 120 shares at a price of 81. Fundamentally, which of these, among these two counters, which one is a good one for Hemant to stay put with and accumulate?
I think Aarti Drugs would be a better choice to stay invested with and accumulate these levels.
Moving on, and let's kickstart the rapid fire session. And Ashish, coming to you for the first question that I have is from Kaushik Mitra, and he's holding shares of Latent View from a price of 575 rupees at a huge loss right now. But what is the outlook for the next 6 months?
I think stay invested. Very volatile stock, but has a lot of potential. Stay invested. You should get money back, I think.
All right. This one is coming from Balakrishnan from Chennai. Dabur, does it make sense to buy at current market price, Kunal?
Yeah, I think I would just suggest a hold on the same.
Okay, Kunal, Gaurav is holding 300 shares of CDSL from a price of 1230 rupees. Outlook for the next 3 months.
Well, I would suggest that the stock can get into a recovery phase. So I would suggest a buy as well as a hold at current level.
Okay, this one is from Naga. 500 shares of PVR at a price of 1,658 rupees per share. Kunal, for the last 2 months, he's not seeing any price movement. What should he do? Hold or sell?
Well, I would recommend to sell the stock at current level.
Okay, KB Rao Ashish is holding shares of HPL Power from a price of 95 rupees. Is that a sell or switch to some other stock or continue to hold on?
Continue to hold on.
Okay, this one is from this one we've already taken, sorry. This one is from Rajendra K and he's writing to us from Bangalore. Kunal, what levels to buy into IT stocks like KPIT, Tech or Tata Infosys for the matter of fact?
Another 5 to 10% it could be a dip where you can look to expect, and that's the zone where you can look to buy.
Okay, Ashish Love Sharma is asking, good time to buy IOCL or should you wait for some price correction?
I think is talking about IOC.
Yes, IOC.
Yeah, I think good. If you have to buy oil stocks, it's a good time to buy them. Yes.
All right. Okay, Vishwanath Nair from Cochin wants to know about Venus Pipes. Good time to buy, Kunal?
Yeah, I think Venus Pipe is a good time to buy. The stock is already at a multi-week high for itself. Good zone to accumulate.
Okay, Ashish Karthik wants to know how are the charts looking like for HDFC Bank?
I think HDFC Bank is always a nice stock to buy, and its stock has done nothing for the last few years, so it should be a very good time for long-term investors to accumulate this at the current levels.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Ashish, for joining us on the show, taking our viewers through what's working for the pharma space, what should the strategy be, as well as resolving all the viewers' queries. And with that, viewers, we are totally out of time on this edition of Buy Now, Sell Now. Trust us, we try to accommodate as many queries as possible. We'll be back tomorrow. So goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets and Noon coming up next with Anisha and Somit.